Welcome back. We're going to the Twitterverse where Benoit has a question. Your comments on Metro, please. This is an interesting name. The grocery theme has done well in Canada.
It has. Look, I think there's been a lot of managers and investors who have looked for investments outside of some of the big sectors Canada is known for, like mining and energy. The consumer sector has done quite well because the Canadian consumer has been in pretty good shape. It's a relatively small sector, so the bets tend to be quite targeted, and Metro's been right in the middle of that. So it is a winner out of the theme where investors are looking for something fairly predictable. And Metro are great operators. They've done a great job over time in growing the business. And, I think ultimately this is one that can continue to do well in this kind of environment where people are looking for predictability.
It's at an all-time high. What could go against the company?
Well, look, if we wind up having a reacceleration in the economy, then you could see people move more toward, as they call beta, things that are going to be more tightly tied to the economy. At this point, economic data in the U.S. is getting better. Canada, we're going to have to see. So I think people are sort of staying more defensive in the Canadian market than they might otherwise be in the U.S. market right now.
Okay, Darren in Barrie, Ontario has a question. Go ahead, Darren.
The question was on General Electric. I'm up probably about 23% on this. I believe their earnings are out this week. In your opinion, is it buy, sell, or hold? And I'll listen to it after I hang up. Thank you, sir.
So Darren, GE is a company we've recommended twice in the last year, albeit it's a behemoth. But as it became less focused on financials and more focused on their industrial businesses, we thought it became very, very attractive. It's one of the 10 biggest holdings at Barometer, and I would buy it today. Stock is behaving extremely well. As far as sectors go, the industrial sector has been about the best performing sector in the last 2 months. And so it's right in the center of market leadership. And GE is doing a great job in executing on their strategies. So at the business level, at the market level, and at the sector level, they're all lined up. I think you've got a pretty good tailwind in this one.
Activist position for Trian Nelson Peltz. Is there more the company should be doing that warrants activist presence?
I think the themes that they're involved in, aircraft through their jet engine division, gas turbines, they're really in a sweet spot. So you could see demand pick up. They continue to cut costs and become more and more efficient. And I think that they're in a company of GE size, you can continue to make strategic decisions that could drive profitability going forward. And you're going to continue to see dividend growth and capital return to shareholders by way of share buybacks. Again, I'd rather own GE's balance sheet than the U.S. government's balance sheet, and you can get a yield, well in excess of that at close to 3%.
We'll get an update on their balance sheet this Friday when they report their quarterly results or second quarter results. Let's go now to Tony in Maple, Ontario. Go ahead, Tony. What's your question?
Good afternoon. My question is regarding Google. If you think it's a good buy at this point, my opinion, I seem to like it. It doesn't seem there's any real major competitors for these people. They're very innovative, very forward-thinking, and again, going back to, I don't see who a major threat in terms of competition is to them. So, and if you can give me street consensus on it as well.
Sure.
So, Tony, Google sits right in the middle of another of our favorite secular themes, which is digital advertising, and we own both Facebook and Google. I know people will point to them and say they're expensive. But to your point, there are virtually no competitors that can stack up to these guys. If you think that growth companies in general can do well and growth is leading the market, if you think that digital advertising, digital spend is going to continue to grow, it's pretty hard not to want to own Google and Facebook. Frankly, you could go and buy the ETF PNQI and get sort of the internet theme as a whole as an ETF. But I think that it's going to be hard to go too far wrong right now with Google.
Overwhelming buy ratings on Google, 44 buys, 5 holds, 0 sells, and some huge upside. $911 is the average price target. So a couple more bucks and you've got $1,000 stock. Let's go to Al in Ottawa, Ontario. Go ahead, Al, you're on the line.
Good afternoon, Anwar and David. I've been watching Celgene for a little while. I look at the graph, and it looks like it's still trying to find the bottom, yet my reading seems to suggest there's an awful lot of people recommending it at the moment. Got to get the street consensus and David's opinion on Celgene.
Sure.
Thank you.
So on the biotechs, biotech was a leading group in the market until October of last year when comments started coming out around pricing and some of the ways that mergers and acquisitions were being done. And it really took M&A off the table for many companies who were looking at using low tax jurisdictions to make acquisitions. So within healthcare, the leading theme right now is healthcare devices. And those would be companies like Edwards Life Sciences, Medtronic, which I mentioned earlier. These are both companies we own. As I said earlier, I'm a big believer in letting the market show you that there's appetite. If you're in a bull market and there's a part of the market that is not participating, don't focus on it. If you see it get going, that's another thing. But I prefer to focus in pharma, managed healthcare, and devices. I don't disagree that the fundamentals for the large biotech companies are attractive. There is revenue growth, there is earnings growth. But for whatever reason, market doesn't appear to be willing to pay for it right now. Now, market continues to get better. This group is likely going to start participating. But I would prefer to see it break above its declining 150-day moving average, which it is firmly below right now. I'd love to see it take out a recent high, say 110, which would give me clear indication buyers are coming back. And the other way that you could play this group is by looking at one of the ETFs like XBI. But even those ETFs don't look that attractive right now in the current context.
How do you do what you're suggesting? You've mentioned a few times that you want to look for those sectors and stocks that are showing outperformance. A lot of that can be on hindsight. Well, that was a good time. So what is your time frame? How do you actually look to see, okay, this is something I should get into?
Well, this is not how we do it, but in the simplest of terms, you want to see the long-term moving average of price, or a smooth moving average of price, moving higher, not lower. It tells you that the trend is higher. You could do it as we do it, where we take all of the companies within an industry and we track what percent of those companies are in long-term price advances. And in a healthy market, that percentage should be rising. More and more companies should be performing well. You could look at just straight price trend, and there's lots of different ways you can do that. None of these right now are standing out for the biotech group. And frankly, if you're in a strong market, you want to own things that people care about right now.
Okay, we'll be back with David Burrows, President and Chief Investment Strategist at Barometer Capital Management. He's taking your questions on North American large cap. Still time to give us a call.